just adding to the chorus of Fed officials wanting to rein in inflation further.
Rein it in further and pushing back against the idea that as they continue to hike rates, we are going to see a recession, and that is the risk they're taking on by doing that. And of course, Raphael Bostic, president of the Atlanta Fed, is someone who has been not super hawkish, but slightly in the hawkish camp when he calls for more rate hikes and when he says that there is still more work to be done, and I am ready to do it. I think we have to believe him. And of course, what he's saying, what others are saying about one more hike, Wall Street's accepting it now. Wall Street figures that yes, in the May meeting coming up in just a couple of weeks now, there's going to be a 25 basis point hike. That's going to take the key rate up to about 5 to 5.25%. But then the markets think that will be the last one, and Raphael Bostic seems to open the door to a pause as well. In terms of playing down the recession risk, he's saying the economy's performing strongly. He says acute bank tensions, I mean, from SVB meltdown and more, that seems to be subsiding. And he said the bankers are telling him their customers aren't calling now and asking if they should move their money. They're not taking deposits out and putting them in bigger banks. And so he seems confident that this is the right thing to do. Now, Jim Bullard, president of St. Louis Fed, who has been one of the more hawkish members of the Fed among central bank presidents, is still pushing for more and a bit more. He said that he does not see a recession ahead. He says Wall Street's very engaged in the idea. This is a quote from him doing an interview with Reuters today. Convinced there's going to be a recession in 6 months or something, but that isn't really the way you would read an expansion like this. And then he goes on to specifically cite the strength of the labor market, very important to him. When it comes to the banking crisis, banking turmoil, whatever you want to call it, he said, you know, if we were in a crisis or going into one, our St. Louis financial stress index would go up to 4 or 5. Heidi, he said, it's not spiking, it's at 0 now. Another way that he's confident he can go ahead, get to 5 to 5.25, but he thinks ultimately that rate's going to get to 5.5 to 5.75. He's looking for the 5.6% ceiling. So we'll get a lot of information now from that meeting in a couple of weeks. We'll get the read from Jay Powell on what kind of expectation as a group they're looking for. But for now, we can see two voices who seem very convinced at least one more rate hike.